There's so much fear and greed that comes into crypto that it always decouples. The reality is everybody's hopes and dreams are in this trade, but it's looking like it might run all the way through till, end of H2, which kind of makes sense. Again, the ISM, the business cycle, is the driver of speculation, risk, excess capital, all of that stuff, because people have higher earnings. We're not positive yet, and that pushes people out the risk curve, and that's what drives the real cycle, particularly the alt season. So the alt season, we find, is highly correlated with ISM. It's the same as the Bitcoin dominance chart. To me, it's either forming a large head and shoulders top or a GMI crash pattern, which is the fall, the rally, the failed new high, and then again a big move lower. And it would make sense, but we need the ISM. We need disposable income or disposable earnings to rise, so people can recycle capital into more speculative things.
Raoul Pal explains that crypto market cycles are driven by liquidity and the broader business cycle, not just hype. When the ISM rises and disposable income grows, people shift toward riskier assets like altcoins. This sets the stage for alt season, which typically follows Bitcoin's lead during periods of increasing global liquidity. He believes we're entering a strong phase of growth, which he calls the banana zone, a period of rapid upside. With institutions like pension funds gearing up to enter, Powell projects massive capital inflows and expects crypto to grow into a $10 trillion asset class. Altcoins may outperform, but attention and capital will likely stay focused on mid-tier projects. Powell emphasizes this cycle may extend into 2026 due to delayed rate cuts and macro shift. While short-term volatility remains, he sees long-term opportunities for wealth generation.
It feels that the market is not really positioned, liquidity is rising, we're getting to the point where the liquidity multiplier in token prices goes up. We're also getting to the point of alts outperforming Bitcoin, where market breadth is improving. We've got activity across the space growing. We've got the narrative of people trying to build big things or storing wealth in Bitcoin or building big things on other chains. Smells to me like there's a yellow fruit hanging around here somewhere. From my work, as you know, we just think, for us, it's kind of straight up from here. I don't know where Bitcoin gets to by kind of August, but we got a decent run. I think we'll be surprised to the upside in how fast stuff runs. Then we'll cool off for a bit, but even using Global N2 as a forward indicator, it barely went sideways for a period of time. So that feels like some chop in late summer. And now Global N2 is rising again, and it's got extremely good correlation. Now, it won't be perfect all the way, but it just feels to me that, from here on in, basically, we got a really good run. But generally, it feels like the mid-tier outperforms Bitcoin, but the bottom tier, there'll be cases of things that do because they're new and they're interesting and they get attention. But generally speaking, there's just not enough capital that flows that far out the risk curve. I think of it as a function of the amount of capital and attention available, right? So like attention times capital, right? That's the whole game in this. And there are so many coins now, ignoring all the meme coins for now, but just generally speaking, there's a lot. So we don't have enough capital to drive all of the speculation and all of the things. So the market has to focus where the attention goes. And so, yes, you'll see pockets of memes doing extremely well because they capture attention and thus capital, using Bitcoin as a reserve asset, but also building the entire government infrastructure on blockchain, driving licenses, property deeds, the whole bloody lot. So it's it's fascinating to see. And then a lot of people say to me, well, if all of this money's coming in from the sovereigns, that may produce an outside return. And I'm thinking, well, if we're going from 3 trillion to 100 trillion, which is my estimate by just extrapolating out the trend rate of growth, you need larger players each time because the market cap is bigger, right? There's no way you're going to get to 15 trillion this cycle unless you've got bigger players. So it's kind of, I don't think it's what people think it is. I think it's just a function of the size of the market. The bigger it becomes, the more that those people are involved, and the more blockchain technology gets used, the more it uses the alts for infrastructure rails, for new forms of compute and storage and all the other things that are coming. Because everyone's like, oh my God, it's a super cycle because of this. I'm starting to err towards, well, we've talked about this before, a longer cycle, just because the business cycle is still below 50. So generally it takes a while to climb up. And then we use the GMI Financial Conditions Index, and that has a 9-month lead. And with the dollar breaking down even today, it's starting to suggest that this may go even into Q2 2026. So it's like the whole cycle got shifted because rates didn't get adjusted and the dollar was sideways for a period of time. So it feels that potentially there is a chance, and again, there's no guarantees in this world, that we're more like 2020 than we are in 2021. Or it's spookily similar to 2017. Buying that low in the first, that's what we did, and it worked really well. Back end of 2022, when global liquidity, it doesn't give the strongest price action, but I don't know, Bitcoin's up 6x since then. So it does work just by getting the bottom of it. But the breakout is when it really counts, right?
If there is chips to be taken off the table in Bitcoin or crypto.
And this is not necessarily the full cycle top. It can be sub-cycles within, right? Because I'm looking at got to 5s a couple of times, backs off again. So you kind of use it like a weekly RSI kind of idea, is like an overbought, oversold indicator. How I think about this to explain to people is call it a 90% correlation roughly. It's when you look at what's the other 10%, it's often the fear and greed, the elements where the market gets over ahead of itself, which is what you're picking up here, is like the deviation from the trend versus liquidity, right?
Yeah.
So when it gets too obscene, people have taken too much risk. And then you've got other scores like leverage that then you would add on to that and say, yeah, and the leverage is built up and that's why we're in excess. And do you look at leverage in terms of percentage of the overall market cap? Because the natural leverage number will expand over time as more people come into the market using derivatives. But we've got these larger players as well. So as the market cap goes up, we have to measure it as that kind of percentage, like we do with short interest in stocks and stuff.
Raoul explains that crypto rallies are driven by rising global liquidity and capital, not just price action. As earnings improve and the business cycle turns, investors shift toward riskier assets like altcoins, often leading to explosive growth phases. He believes we're entering a strong bullish cycle, possibly lasting into 2026, fueled by institutional interest and expanding blockchain use. Powell sees this as a banana zone, a period of rapid price acceleration, with crypto potentially reaching a $10 trillion market cap.
Just running through, some of the key tokens and stuff like that. And also, if there's anything else you want to add about Bitcoin, I mean, what you've shown us is it's super neutral from here, so we can have a run and let's see what leverage and other things build up.
So looking outside of Bitcoin, so we are in a super bullish liquidity regime, right? So, and Bitcoin is going to be breaking the all-time high. It already has in the last week or so, and it's retraced. And it could chop around here, but I don't think we're going to see a hell of a lot of like downside, not a large move, given those three risk scores where they are, then none of them being excessive.
And this can also be, I'm guessing this is highly correlated with Bitcoin dominance.
Yes.
Is another simpler way of looking at it. So you can see what a full alt season looks like. Because there was just less around, right? You had a bunch of ICOs, but you didn't have a lot of alts really. Not like now.
Yeah. Yeah, you couldn't have even really put together a top 200 back then.
Yeah, agree.
So
this is the start of an alt season you're seeing there. I think they always decouple at the end of the cycle. There's so much fear and greed that comes into crypto that it always decouples. And so it sucks people in too late. Obviously, it always does. And it's a problem. But it's a feature, and the indicators you built before actually really help understand where are you in the FOMO cycle. Because it's basically those indicators put together are basically FOMO.
You've arrived at where you think...
Not 100%, but we're kind of erring that way. I mean, definitely Q1, but it's looking like it might run all the way through till, end of H2, which kind of makes sense. Again, the ISM, the business cycle, is the driver of speculation, risk, excess capital, all of that stuff, because people have higher earnings. We're not positive yet. So although tech stocks have done well, stock markets have done decently well, Main Street has not. Businesses are still struggling. Yeah. But once that turns, and I think the Federal Reserve will be cutting rates because, as we've been saying for a long time, Julian and I, inflation is coming lower, and it is, then we will see Main Street or people with mortgages, household income increasing, and that pushes people out the risk curve, and that's what drives the real cycle, particularly the alt season.
So traditionally, Bitcoin does this when, liquidity increases or decreases. When has been the exceptional price rises or movements in the Bitcoin price, and what has that sensitivity to the global liquidity situation been? And I found that, it's very clear that we've had like these very bullish regimes where global liquidity expands very rapidly. And when it expands very rapidly, but also when it sort of breaks out of a period of contraction, generally Bitcoin's sensitivity to the increase in global liquidity increases, it magnifies. And with a lag, so does crypto. So it's kind of something that we already knew. We looked back and we could look at the price charts and go, yeah, Bitcoin rallies first and altcoins rally next, and, so be it. But this is like just trying to really quantify it. So we've got, I think, a stronger guide in terms of what the potential price will be during this expansion period in global liquidity. And, on top of that, Raoul, for the pro community, I built something that's been irking me for like 2 years, which is, well, even longer. It's like some kind of risk model. So you can sort of understand where the upside is if liquidity increases at a certain rate. But, there are other factors at play as a market. Like if you think back at the last cycle, everyone's got PTSD as to, why Bitcoin didn't reach somewhere close to 100,000. That's what everyone was calling for.
Raoul Pal highlights that global liquidity and economic cycles, not just hype, drive major crypto rallies. As indicators like the ISM rise and earnings improve, capital shifts into higher-risk assets like altcoins, setting the stage for a strong bull run possibly lasting into 2026. He predicts a major wealth-building phase driven by institutional inflows, blockchain adoption, and macro trends. With over 1 billion crypto wallets expected by 2025, Pal sees crypto entering a rapid growth phase unlike anything before. Do you believe crypto is entering its strongest growth phase yet? Which altcoin are you watching most closely this cycle? Share your thoughts in the comments.